Welcome to the Jill on Money Show. It is Sunday, July 23rd, and we are here trying to help you manage the big decisions of your life, and those decisions can often involve money. So if you're thinking about a big change, if you need a little help, if you need a little coaching, we'd love to hear from you. Just go to our website, jillonmoney.com, and click the Contact Us button. When you check the box, Mark does everything else. While you're on the website, don't forget, we've got the free weekly newsletter, we've got the book, we've got the subscription service, Jill on Money Live, so much there for you. You should really check it out. Right now, let's talk to Joel from Seattle, who is joining us. Hello, Joel. How can we help you out?
Well, I am curious about how much company stock I should keep in my portfolio. I have two options at work. I get RSUs for like bonuses and things. And then I also have the option to invest in the ESPP, and the discount on the ESPP is 10%. And so I'm trying to figure out how much I should keep or sell right away and just invest, pay the taxes and invest in other things.
So tell us a little bit about you. Are you personal life? Are you partnered, married, parent? What's going on?
Single, no kids.
How old?
I am 42.
And how much do you earn?
All in last year was around 250. But typically, I wouldn't make that much money. And that's kind of why, part of the reason why I'm calling is because this year is probably, I'll never make this much money again, just because of the timing of RSUs vesting and our current stock price and things. So I don't want to mess it up. I want to save everything I can in the right places. So I've been doing with our company match on the 401k is 50% up to the max.
Well, you have a company that matches 50% all the way up, not just to 6%?
It's not based on your percentage of salary. It's just, So for the first part of the year, what I'd been doing is I sold my initial RSUs, and I'm using that to pay my expenses and basically putting everything into my 401k so that I can get that 50% match as soon as possible.
That's awesome. Great. Okay. How much is in your 401k right now?
I've been with this company for a couple of years, for almost 4 years, I guess. That 401k is a $200,000.
Do you have other 401k assets that you've either rolled over or not rolled over, but old stuff that's poking around?
Yeah, I have all of that. I put over at TD Ameritrade, and I have $300,000 in those old IRA
And those
accounts.
Are in rollover IRAs now?
Yeah, all in one.
Okay, great. Any other assets? We'll get to the RSUs and the employee stock purchase plan in a second. Any other money invested in general?
Yeah, I have about $70K in a Roth IRA, and then I have $150K in other various trading accounts.
Those are all in taxable brokerage accounts.
Exactly, taxable brokerage accounts. And then I have about 12 months in my emergency fund, a little more than that.
Do you own a home or do you rent?
Cannot afford a home in Seattle, so I rent, and I enjoy renting.
Bless you. That's great. Oh, one other question. You said that you won't make this much next year. Well, let's say even this year. What would be like your normal base and normal bonus, not like extraordinary year?
Yeah, probably around 170-ish, maybe 175. Okay. So I'd still a decent amount. And what I'd been doing also is as soon as I had maxed out my 401k pre-tax, we have an after-tax we can contribute to. And then there's an option on Fidelity, because this is through Fidelity, where they'll auto roll it over to a Roth.
Oh.
So they do that. So it's like the mega backdoor
Yes,
Roth.
I love the mega backdoor Roth. You're putting away a lot of money.
I don't want to mess it up. That I won't make, like I said, I probably won't make this much money ever again. And so I want to not mess it up.
How much money is in the restricted stock units right now?
Just 30,000.
Okay.
And that's ESPP and RSUs.
Okay. Combined. I'm not going to guess where you work, but let's just pretend for a second that you were calling from Seattle and maybe you work for a company like Microsoft. Let's just pretend that for a second. I'm not saying that Joel works at Microsoft. I don't know that. Okay. So I'm just going to give the kind of general advice based on that. Microsoft's a great company. And there are so many times where I've heard from people like you who work at great companies and say, obviously, I should buy as much as I possibly can in the employee stock purchase plan because I get it at this 10% discount. As long as I, satisfy the holding period, it's all great. But I always point out that I still probably would rather you not do that because you're being awarded restricted stock on an ongoing basis. So, if you said to me, I don't have any RSUs, I don't qualify for that, I'd really like to participate. Okay, maybe. But, you've got exposure to the company, right? So if you look at your kind of like where you are in your investing life, right? You got $500,000 that's in traditional retirement. And by the way, do you have a 401k, a Roth option?
Yes, I do have a 401k Roth option, but I've been doing the pre-tax option and then doing the Roth conversion.
I like that you're doing that. It's also something to think about if your taxable income starts to drop more significantly, like if, I didn't make as much money in one particular year, maybe, now I'm really closer to like 150, not 200. And so maybe you might consider just doing all Roth. But again, you're saving a lot of money. I think that if you could take 5% of your total invested assets and say, that's the exposure that I feel comfortable having, in general with one single company. There's 30 now. You're going to get another 50. That's $80,000. I think that's, essentially, it's a little bit more than 10% of your current invested assets. And I think that's plenty. I wouldn't do more than that. I really would rather you have more like 5% in the company stock. Even if it's the greatest company in the world, even if it is Microsoft, it's just sort of prudent. And then what I also would be clear about is that because you continue to accumulate RSUs, you should have a programmatic approach to selling. Every time these shares come up to sell, you should sell them. Now, I'm not saying you should do it in the middle of a bear market and sell them. Often what happens, it's the opposite. People will say to me, oh my God, the stock's at an all-time high. I don't want to sell. No, you should. That's exactly when you should want to sell. You take a little bit off the table at a time. So I wouldn't go crazy with the ESPP. You've got plenty of risk out there with the company. And I would do what you're doing and, again, diligently begin to unload those RSUs as they become available for sale.
Okay. And for the ESPP, though, I can still invest. I would just sell it essentially when it vests and take that 10%, pay the taxes on it, and then move that money into other things.
Two things about the ESPP. Okay. It's a 10% discount, right?
Right.
Well, if the stock goes down, it doesn't really matter.
Yeah,
so,
still have to pay that.
Yeah, exactly. So, I think we often will say like, oh, it's a discount. It's great. Well, that presumes it only stays the same or goes up. So that's one thing. What's the holding period on your the plan?
To not pay income tax on it is 2 years. Mm-hmm. Well, 2 years from the vest. So really it's I guess 21 months.
So so it would be long-term capital gains. Look, I think that it's fine. Again, make sure you pay attention to that and just know that, it's a 2-year risk. And, I don't know if you're really happy where you are, that's great, but things happen. It's weird. And that's why, whenever we talk about employee stock purchase plans at 10 or 15% discount, everyone gets all giddy about it until the stock goes down. And then like the value of your RSUs, the value of your employee stock purchase, everything goes down. And then you're kind of bummed. And then all of a sudden you're like, oh, and they're doing layoffs and my job's at risk. Not that I think that's going to happen, but it's at least worth considering that's the kind of risk that you are taking. And then how much of that kind of risk do you want to absorb? That's why I say between 5 to 10% of your invested assets, no more.
Got it. That's very helpful.
You're in good shape, man. If you have a question about anything going on in your financial life, big or small, we'd love to hear from you. All you need to do is go to JillOnMoney.com, click the Contact Us button, write your note, and if you want to come on the air, you check that box. But if you're going to write a note and you want us to answer it as an email, give us a lot of details. That's what we need, okay? While you're on the website, you can buy the book, The Great Money Reset. You can subscribe to Jill on Money Live, where you'll have access to quarterly live webinars and lots of great bonus content. You can subscribe to us here at Jill on Money, wherever you find your podcasts. We ask you to do something nice for someone else today. Change your work, change your wealth, change your life. Thank you for listening, and we'll talk to you tomorrow.